Hey everyone, this is Rusmin from the Fifth Persons. At Fifth Person, we invest in great businesses, be it for dividends or capital gain. My job here is to help retail investors to do the same so that they can grow their wealth safely and consistently over time. Okay, so in this video series, I'm going to answer 3 of the most commonly asked questions by retail investors. And the first question is, there are not many mid to large cap companies in Singapore market that actually provide a yield of above 5%. And I was actually reviewing my portfolio, and most of the good and stable companies seems to be giving a yield of only 3.4% to 4.5% based on the current market price. And the question is, how can I speed up my income investing so that my yield can actually go up to as high as 8%. Okay, so to answer this question, of course, is the first one is very obvious, is that if you can invest during the crisis, you could actually easily get a yield of 8% easily. Okay, so as you all know, that market crash, a lot of share prices, even among the good companies, will collapse, and this will actually allow the yield to go up to as high as above 6% to as high as 8% and sometimes even 10%, even for the good companies. Okay, so of course, crisis is not something that we get to choose, and it's beyond our control, and in most cases usually we should be investing in during normal market condition. Okay, so and the second best answer to this question is, of course, to invest into dividend growth stock. Okay, basically those stocks that can actually grow their businesses over the long term. Okay, so when you invest in this type of dividend growing companies, you keep them for 5 years, 10 years, your yield will actually grow based on the cost price that you purchase. Okay, so let me give you an example on this. Is that if you invest in this company called ComfortDelGro, okay, I think most Singaporeans will know this brand called ComfortDelGro, and because they are the one company that actually run major public transportation system in Singapore. Okay, so if you invest in this company 10 years ago, they were actually giving a yield of only 4%. Okay, as of today, when we record this video, they have actually doubled their dividends from 5 cents to about 10 cents. And if you invested 10 years ago at a yield about, let's say, 4%, and if you keep it until today for almost 10 years, okay, you should have a yield of easily at least 8% today. Okay, and another answer to this question, it would be you need to actually include some REITs in your portfolio. Okay, so REITs is basically a real estate investment trust that is basically investing into a pool of commercial asset that will actually give you a very stable rental income over time. Okay, so REITs is basically a leverage instrument that invests into commercial properties that will give you a yield easily at a range of 5%. Some of them are giving you as high as 7%, so 8%. Okay, so do consider REITs if REITs is not part of your portfolio. Okay, and the second question regarding REITs is basically the question is, how do you calculate the property yield of a REIT? Okay, so property yield is basically is similar to the net rental yield. Okay, so if you invest in physical property, you know that we usually look at the net rental yield. Okay, so for REITs, we look at the property yield, and the formula to calculate property yield is basically is the percentage of net property income that you can actually find it in the income statement of the REIT's annual report, and divided by the property valuation, which you can actually find this number in the balance sheet. Okay, so if you calculate the percentage of net property income over property valuation, you should get the property yield number. Okay, so for example, if you REITs own a $1 billion property valuation, and every year they make 50 million in net property income, that means that if you take 50 over 1 billion, you get a 5% in terms of property yield. Okay, so that's how you actually derive the property yield. Okay, and the third questions that are commonly asked by investors is that why some property counters are considered as cyclical stock but not for REITs. Okay, so The answer to these questions actually depend on the business model of the company. Okay, so some property counters that I come across, their business model is basically a pure developer, meaning to say that they actually look out for a land to bid, and once they successfully bid that land, they will actually construct a building on that plot of land, and then they will start to sell away those assets like residential property to the market. Okay, so this is a business that can become very cyclical, and because in good time when the properties are moving, a lot of investors will want to invest in properties, and the sales will be doing very well for this type of companies. Okay, so while else for in bad time or like government introduce some cooling measure, some of these pure developer may actually suffer from the slowdown in terms of sales of their property assets, and those will actually affect their earnings as well as their dividends. Okay, whereas for REITs, like I said, they only invest into mature commercialized assets, meaning to say that when they buy a property, usually those property already come with a few base of tenants. They are actually paying them a rental income on the monthly basis. Okay, so these REITs, when they invest into mature property assets, they actually have a very predictable cash flow on the month-to-month basis. Okay, so that's why REITs is a lot more stable even in the market crisis. The tenants will still have to continue to pay the rental back to the REITs. Okay, that's why REITs is a lot more stable as compared to a property developer that is actually purely developing properties and selling them. Okay, and I hope you actually enjoyed this video, and if you know anyone who can actually benefit from this video, please feel free to share it with them. And of course, if you have any question related to investing, please type in the comment below, and we will actually select some of the best questions, and then we will answer them in the next video. Okay, so once again, this is Rushmin from 5th Person. I will talk to you soon.